Have you ever sat there wondering about the stock market and if you could possibly make money there? Well, let's dive right into the intriguing world of stocks. The stock market, in its simplest form, is a bustling marketplace, not unlike a traditional fruit and vegetable market. But instead of buying apples or oranges, you're buying and selling shares. Shares, you ask? Well, they're essentially tiny slices of a company's pie. When you buy a share, you're buying a small piece of ownership in a company. You're staking a claim in the company's future, betting on its success. Now, the stock market is a place of great potential. Some people have made vast fortunes, their wealth skyrocketing as the companies they've invested in flourish. Think about those who invested in companies like Apple or Amazon in their infancy. Their tiny slices of the pie have grown into massive money-making machines. But like any marketplace, the stock market has its risks. Not every company will be the next Apple or Amazon. Some companies falter, some fail, and when they do, the value of their shares can plummet. This is the risk you take when you enter the stock market. You're gambling on a company's future, and sometimes the gamble doesn't pay off. But don't let that scare you away. There are ways to mitigate these risks, to make informed, calculated decisions. This is where brokers come into play. Brokers are like your guides in the stock market wilderness. They have the expertise, the knowledge to help you navigate this complex world, to help you make decisions that could potentially lead to profit. So the stock market, this bustling marketplace of shares, of potential fortunes and potential risks, is a place where you can indeed make money. But it's not a place for the faint-hearted, it's a place for the bold, the calculated, the informed. So intrigued yet? Let's delve into the captivating history of stock trading. Scene script. Stock trading wasn't invented yesterday or even 100 years ago. It has a rich history that dates back to the 1600s. Picture this. The year is 1602, and the world is a place of maritime exploration and spice trade. In the heart of this era, the Dutch East India Company, a powerful entity, emerges. But what set this company apart was not just its grandeur, it was also the first company to issue shares to the public. This was a game changer. Instead of a single wealthy investor shouldering the risk, the concept of shares allowed several investors to pool their resources. This not only reduced individual risk, but also opened up opportunities for everyday people to participate in commercial ventures. The Dutch East India Company, in their quest for funding, unwittingly pioneered a system that would evolve into the stock market we know today. But what's the point of these shares? Well, they represented a slice of ownership in the company. If the company flourished, the value of these shares grew, leading to profitable returns for the shareholders. On the flip side, if the company sank, so did the value of the shares. It was a risky affair, but the allure of potential profits made it a risk worth taking. And so, the first stock exchange was born in Amsterdam, where these shares were bought and sold. This was a bustling hub of financial activity, a place where fortunes were made and lost. Fast forward to today and you'll find that the basic principles remain the same. Companies issue shares to raise capital. Investors buy these shares in the hope of making a profit. The stock exchange acts as a marketplace for these transactions. And let's not forget the brokers, the intermediaries who facilitate these trades, earning a commission for their services. And thus the age of public trading was born, setting the stage for a worldwide financial revolution. From hand signals and shouting in trading pits to clicking buttons on a computer, stock trading has certainly come a long way. Indeed, stock trading has been a wild journey of transformation. Let's take a walk down memory lane to see how it all unfolded. In the 17th century, the world witnessed the creation of the first stock exchange, the Amsterdam Stock Exchange, now known as Euronext Amsterdam. This was a marketplace where individuals could buy and sell shares of companies, essentially betting on their future prosperity. As the centuries rolled on, more stock exchanges sprang up around the world, from the London Stock Exchange in the heart of England to the New York Stock Exchange across the pond in the United States. These were bustling arenas of commerce filled with brokers shouting orders and using hand signals to communicate trades, a far cry from the calm and quiet of today's electronic trading platforms. Now, let's fast forward to the late 20th century, where the advent of computers brought about a seismic shift in stock trading. No longer were physical trading floors necessary. Instead, stocks could be bought and sold electronically, connecting traders from across the globe. This was a game changer, as it allowed for greater speed, efficiency, and access to global markets like never before. But the evolution didn't stop there. The dawn of the 21st century witnessed the rise of online brokerage platforms. These platforms, accessible to anyone with an internet connection and some spare change, have revolutionized stock trading. They've made it possible for ordinary folks, not just Wall Street tycoons, to participate in the stock market. With a few clicks or taps, you can buy shares of your favorite companies, trade them, and hopefully make a tidy profit. This democratization of stock trading has been a significant development. It's opened up opportunities for a new generation of traders who can learn, experiment, and grow their wealth in ways that would have been unimaginable just a few decades ago. With the advent of technology, stock trading has become more accessible than ever before. Now, isn't that something to click about? Now that we know the history, you might be wondering, how can I dive into this ocean of opportunities? Well, dear friend, it's simpler than you might think. In the world of stocks, you're an investor, a part owner of a company, if you will. When you buy stocks, you're buying a piece of a company, a slice of the corporate pie. If the company performs well, your slice gets bigger and so does your wallet. But if the company stumbles, your slice might shrink. That's the risk and reward game you play. Now, how do you buy these stocks? Enter the stockbrokers, the middlemen of the stock market. They are licensed professionals who buy and sell stocks on your behalf. In the olden days, you had to physically go to a broker to place your trades. Today, thanks to the magic of the internet, you can trade stocks from the comfort of your own home, or even while sipping a latte at your favorite cafe. You see, modern technology has made it possible for anyone with an internet connection to participate in the stock market. You can open an online brokerage account, deposit money into it, and start buying and selling stocks with just a few clicks. You can track the performance of your stocks in real time, research companies, and make informed decisions based on market trends and financial news. But here's the kicker. Trading stocks isn't just about buying low and selling high. It's about understanding the market, interpreting financial reports, and having a sound investment strategy. It's about patience, discipline, and the willingness to take calculated risks. It's not a get-rich-quick scheme, but a game of chess where you need to think several moves ahead. So yes, you can dive into this ocean. But remember, it's not just about swimming, it's about navigating the waves wisely. So, can you make money in the stock market? Certainly, but is it easy? Well, that's another story. Now, let's delve into the nitty-gritty of stock trading. Picture this. You're a knight, your stocks are your trusty steed, and the stock market, that's your battlefield. It's a place of high stakes, oscillating fortunes, and yes, the potential for untold riches. But before you charge headfirst into the fray, it's important to arm yourself with knowledge and strategy. You see, stock trading isn't just about buying low and selling high. Oh no, it's a complex dance, a delicate balance of risk and reward. The potential for profit is alluring indeed, but it's accompanied by the risk of loss. And this is where research, strategy, and patience come into play. Research is your secret weapon. It's about understanding the company you're investing in, its financial health, industry trends, and market sentiment. Just like a detective, you're piecing together clues to determine whether a stock is a worthy investment or a ticking time bomb. Next comes strategy. Some traders prefer the fast-paced world of day trading, buying and selling stocks within a single trading day. Others opt for swing trading, holding onto stocks for days or weeks to capitalize on market trends. Then there are the long-term investors, who buy stocks with an eye towards the future, banking on their gradual appreciation over time. Whichever path you choose, it's crucial to have a plan of action and stick to it. And then, my friends, there's patience. Rome wasn't built in a day, and neither is a stock portfolio. It's about weathering the market's ups and downs, resisting the urge to panic sell at the first sign of trouble, and having faith in your investments. The stock market is not a get-rich-quick scheme. It's a tool for building wealth over time. So, are you ready to take the plunge?